You know how it is when a great party suddenly comes to a dead stop? Well, that's kind of what just happened in the Indian stock market. It was on an amazing winning streak and then slam, the brakes came on hard. So what exactly happened? Let's dig in.
Yeah, the music just stopped. After a solid 2-day climb, the market did a complete 180. The Sensex dropped by over 400 points, and the key Nifty index slipped below that really important 26,100 level. Just like that, all that positive energy seemed to, well, evaporate.
Okay, so here's how we're going to break it all down for you. We'll start with the sudden pullback itself, then get into the big tug of war between global fears and local strength. We'll look at which sectors got hit and which held up, check out the key numbers everyone's watching, and finally, try to figure out what's coming next.
All right, let's dive right into our first section, the market's sudden pullback. We're talking about how a really confident rally just hit a wall. Now you gotta remember, this drop didn't just happen in a vacuum. The market was feeling good. It had some serious momentum coming off a strong October, and that carried over into a nice 2-day uptrend. And then, almost out of nowhere, the whole thing flipped.
So let's just walk through it. October was all about building up that steam. The last couple of days, that impressive climb just kept going. And then, today, the streak snapped. Nifty fell below that key psychological level of 26,100, and it happened fast. A really rapid reversal.
And this really gets us to the heart of the matter. It's a classic battle, a real tug of war between what's happening globally versus what's happening right here at home. These two major forces are pulling the market in totally different directions. So in one corner, you've got these heavy global headwinds. We're talking worries about the US Fed, foreign investors selling off their shares, a weaker rupee, a lot of uncertainty. But in the other corner, the domestic story's looking fantastic. We've got strong 7.8% GDP growth, incredible demand during the festive season, and even easing crude oil prices. But for right now, it really seems like those global fears are winning the tug of war. And this quote right here, it just sums up the mood perfectly. Even with all the amazing news on the home front, those strong domestic numbers, the keyword for investors is cautious. It's clear they're looking over their shoulders at what's happening around the world, and it's making them think twice.
Okay, let's zoom in a bit, because this pullback didn't hit every part of the market in the same way. It's time for a closer look at the winners and the losers.
Just take a look at this. It tells you pretty much everything you need to know. You've got the metal and IT sectors, which both took a pretty significant hit. But then, look at the bank index. It really stood out from the crowd, holding up pretty well. So, what gives? Why the big difference? Well, for metals and IT, it was like they got hit by two totally different storms. The metal sector got rattled by very specific local news, changes to steel import policies that made everyone worry about more competition. Meanwhile, IT was dealing with global issues. Investors started cashing in their profits, getting nervous about negative trends in the global tech scene and some so-so earnings from the US. But the banking sector, a completely different story. These stocks really held their ground, and the reason is simple. They're plugged directly into all those strong domestic factors we were just talking about, like great Q2 earnings and a general feeling of optimism about India's economy. So, when you have some sectors down and others holding up, what does that create? Uncertainty. And we can actually put a number on that feeling. It's called the India VIX, or as some people call it, the Fear Index. And boy, did it jump, up by almost 13%. A spike like that is a big flashing sign that investors are getting ready for some more wild swings. Okay, so with all this uncertainty in the air, where do we go from here? Let's get into the nitty-gritty and look at the key numbers and technical levels that all the traders have their eyes on right now. Now, before we throw a bunch of numbers at you, let's make this super simple. We're going to talk about support and resistance. Just think of it like a room. Support is the floor. It's a price point where buyers usually step in and keep things from falling any further. And resistance? That's the ceiling, where sellers tend to show up and stop the price from going any higher. Floor and ceiling. That's it. So let's apply that idea to the Nifty. The ceiling, our resistance, is right around that 26,100 to 26,200 zone that it just fell from. And the floor, our support, is now down in the 25,800 to 25,700 range. The big question on every trader's mind is, will that floor hold? Because if it breaks, we could be in for a bigger drop. And what about our resilient banking sector? Well, for the Bank Nifty, the magic number to watch is 57,500. For the bulls, the optimists in the market, holding that support level is absolutely crucial to keep the good vibes going.
All right, so we've covered the what and the why. Now for the million-dollar question. What should we actually expect to happen next? Let's take a look at the road ahead.
The term you're going to hear a lot right now is consolidation phase. Really, all that means is the market is kind of taking a breather. It's moving sideways, stuck between that floor and ceiling we just talked about, while the buyers and sellers basically do get out to see who's going to be in control.
So, if you're watching the markets next week, here's your checklist. Keep an eye on global market stability, what foreign funds are doing, how the currency is moving, and of course, any little signals about US monetary policy. The biggest clues are probably going to come from outside India.
It really all boils down to two main possibilities for Monday. If things calm down around the world over the weekend, we could see the market try to climb back up and test that ceiling again. But if that global uncertainty sticks around, you should probably expect more people to sell and lock in their profits.
So, if you remember just one thing from all this, let it be this. The market is walking a tightrope right now. It's caught in this really delicate balance. We've got our strong local economy acting as a safety net, but these powerful global headwinds are trying their best to push it off balance.
And that leaves us with the big, forward-looking question, doesn't it? We know India's domestic story is strong, it's a powerful engine for growth, but those global storms are definitely picking up speed. So which of these powerful forces is going to win out and decide where the market goes from here?